Hello guys, welcome back again with me. Don't forget to like, comment and subscribe this video, okay? I want to tell you about some article. China Central Bank cut key loading rates in a surprise move on Monday to revive demand as data showed the economy expectedly slowing in July, with factory and retail activity squelched by Beijing zero-COVID policy and property crisis. The grim set of figures indicate the world's second-largest economy is struggling to shake off the June quarter hit to growth from steered COVID restriction, prompting prompting some economists to downgrade their projection. Industrial output grew 3% in July from a year earlier, according to the National Bureau of Statistics, below the 3% expansion in June and 4% increase expected by analysts in returns fall. Retail sales, which only just returned to growth in June, rose 2% from a year ago, missing forecasts for 5% growth and the 3% growth set in June. The July data suggests that the post-lockdown recovery lost steam as the one-off both from reopening visited on mortgage boycott triggered a renewed deterioration in the property sector, said Julian Ivan Fithard, senior China economist at Capital Economics. The People Bank of China is already responding to these headwinds by stepping up support, but with credit growth proving less responsive to policy loosening than in the past, this probably won't be sufficient to prevent further economic weakness. Local shares gave up earlier gains after the data while the yen weakened to one-week low against the dollar, and the Australian and the New Zealand currencies followed back from their just 2-month highs. China economy narrowly escaped a contraction in the June quarter, hobbled by the lockdown of the commercial hub of Shanghai, a deafening downturn in the property market, and persistently soft consumer spending risk still abound as money. Chinese cities, including manufacturing hubs and popular tourist spots, embraced lockdown measures in July after press outbreaks of the more transmissible Omicron variant were found. The property sector, which has been further rocked by a mortgage boycott that weighed on buyer sentiment, deteriorated in July. Property investment tumbled 12% in July, the fastest rate this year. Niwen Shanghai-based economist at Huabo Trust lowered his forecast for the third quarter gross domestic product growth by 1 percentage point to 4% after the weaker-than-expected data. In order to prop up growth, the central bank on Monday unexpectedly lowered interest rates on key lending facilities for the second time this year. China's policymakers are trying balance the need the source of regulatory recovery and credit neo-COVID cluster. As a result, the economy is expected to miss its official growth target this year. Thanks for me. Don't forget like, comment, and subscribe. Share video. Okay. Bye.